Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the MarketSite in New York City is Jay Gragnani. He's the head of research for Nasdaq, Dorsey, Wright, and we're here for an overview of what's happening in the markets right now. Jay, as always, thanks so much for joining me at MarketSite. And I'm sure you've been kept very busy. There's a lot going on right now. What are you mindful of in today's market?
Absolutely. Well, first of all, Jill, good morning. It's good to be here with you today.
Thank you.
And absolutely, there's always a lot going on. That's one of the exciting things about this business, about being in the markets, is there's always something exciting and interesting going on. And when we look at the markets today, you see a lot of interesting ideas. U.S. equities is one area that we continue to focus on across the board. And when I think about what we need to be mindful of today, continuing to focus and monitor individual positions in the equity market, because there's a lot of noise out there that's happening. There's a lot of noise right now that's happening not only here U.S. but globally as well. You think about all of the things out there that the markets are trying to listen to, that the markets are trying to digest and understand what's going on, from everything out there like the trade talks to Senate hearings that might be happening today. But one of the most important things that we do and be very mindful of today is listening to what the market's doing, reacting to what we're seeing the markets do. And so far this year and this month really hasn't been any different. The markets really have continued to be resilient. So we're going to continue to watch and be mindful of the fact that, can the markets continue their resiliency this year? The other thing that we're watching, and certainly something that I think is on a lot of people's mind today, are interest rates. Right. And we just had a Fed rate hike, and so we'll continue to watch interest rates and see how increasing rates or potential longer-term rates on the Treasury yields are impacting bonds in people's portfolios.
And is that where you're seeing the pockets of risk and stability? It seems like it always comes back to fixed income. It
does, absolutely, and sure. So the stability, I think we continue to see that in equities. By and large, we continue to see pockets of stability in really a lot of the growth-oriented stuff. A lot of the things that we've seen this year, 2018 has been a year really where we've seen a continuation of trends. And I mentioned resiliency. The growth-oriented areas of the markets have continued to certainly be resilient. And yeah, you mentioned risk, and certainly that's one area. There's been a lot of uncertainty over interest rates this year, and that's really a pocket. If you see interest rates rise or increase in a very meaningful way, that's going to adversely affect the bonds inside of people's portfolio, or at least the traditional Treasury type of bonds. Now, there's lots of other areas of the bond market, and through the investment world, whether it's through exchange-traded funds, there's lots of areas, lots of different sectors that investors can really look towards today to gain exposure to fixed income, but diversify away a little bit from traditional Treasury type of investments. So you think about other areas of the market out there. Things like preferreds are an area of traditional area of fixed income in the sector sense. Convertible bonds are another areas that are a little bit different than traditional fixed income. And high yield is another area. Those things tend to be a little bit more correlated to equities than they do fixed income. So as you're thinking about risks today, certainly interest rates are one thing to keep an eye on, and we'll continue to watch it as interest rates are bumping up against their levels that they saw back in May of this year on the 10-year, about 3.2, inching back close to that today.
We've also seen a lot of stock-specific news, particularly with Tilray and the cannabis sector overall. What lessons have been learned here in terms of what's an investment and what's a trade?
Sure. Well, I think Tilray is a great example of a stock that many investors and traders really looked at, but certainly as a trade, as trading opportunities. Relatively new name out there in the marketplace, and really the industry at large out there is still a lot of uncertainty, a lot of questions around the legality of the products that are underlying some of those companies, as they're more state specific as opposed to federally oversight there. But you look at that space and you look at that sector, and there's a lot of excitement, there's a lot of buzz. I know that there's a lot of buzz when I get my friends calling me that have nothing to do with the markets, calling me, asking me about these stocks. And so, those are certainly areas that do tend to provide good trading opportunities, either on the way up or the way down, participating on both sides of the market. But just being mindful of those stocks, and specifically those areas of the market that do have a little bit more uncertainty. And that's where having a financial advisor can certainly help, understanding which areas of the market are more ripe for trading opportunities, like a little bit more speculation in terms of some of the cannabis type of stocks, or areas of the market that we really want to be focused on as more investment type of ideas.
All right, and to wrap it up here, what are some of the volatility triggers? We already spoke about some risks within the market. What are you looking for specifically when it comes to volatility through the end of the year?
Sure. So we did speak about some of the risks. we're heading now into Q4. Historically, interestingly enough, September is the worst month on record for the market out of all 12 months. And so far, there's still a couple days left, but so far it looks like September is going to end with a positive streak for the markets. And that's a pretty interesting sign. We still have to get through October. October, historically, while not the worst month, is one of those months that we have seen some major events happen going back to 1987, the crash of 29. So we'll certainly keep an eye on October and continue to watch indicators and see as we move through that. But then all of the other geopolitical risk out there in the marketplace, whether it's the trade talks, seeing how those resolve and how the markets react to that, is something that we'll continue to watch and monitor out there in the market.
All right. Well, thanks very much for joining me at the MarketSite, Jay. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.